Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about how would I invest $10,000, specifically $10,000 into the stock market. So there's many different ways you could invest $10,000, but we're sticking to the stock market. How would I go about investing that? And this video is a follow-up video to a video I did last month called How to Invest $1,000. And that video just did phenomenal, like over 14,000 views in the first month, which is like ridiculous for this channel to get any video over 10,000 views in the first month. So that's an amazing video. So I figured if you guys were interested in that last video, you're probably going to be interested in the $10,000 video. So if you have $10,000 saved, I would say you're probably a little more experienced. You might be even a little bit older than someone investing that first $1,000. So you might have a little bit more knowledge to your game. So we're assuming that you have a little bit more knowledge now at this point. And how would I go about distributing that money all around, guys? So leave a thumbs up if you enjoy this video today. Leave me a comment if you have any questions or just want to comment in general. I'd love to see those guys from you guys. Let's get into this. So step number one, I would pick out the stock you're most bullish in. So the one stock that you're like, if I had to put all $10,000 into this stock, this is a stock I would do it. If I had to tell my best friend, if I had to tell my family members one stock to invest in, this is the one stock I'm talking about. That one stock you're just so bullish on. Pick out that one stock and then put $4,000 into it. So you're putting 40% of your total amount of money you have to invest in that one stock, which is a pretty big amount. It's a pretty big amount. But at the same time, I'm a believer, and this is my philosophy, I'm a believer that your main stocks, your number one, number two stocks, especially your number one, should always have the majority of your money into that stock. Which is why I think it's fair to have 40% of your money into that stock. I think your number one stock should always be the biggest investment over all the others because it's your horse. It's the one you believe in more than anything, guys. So why just put a little small amount of money in it when you could put a much larger amount of money in it for a stock you believe in a lot more than all the other stocks, guys? So that's why I think a big amount of money like that, 40% should go into that number one stock. And that's honestly the way I've done it, whether I was investing $1,000, $10,000, $100,000, I've always had my number one stock has always been at least 40% of my portfolio. So think about that, guys. I think it's very important, that number one step. So then we move on to step number two. So now you need to pick out a second favorite stock. But the key to this second favorite stock in step number two is you need to make sure it's in a different sector than what your number one stock was. Because we'll get to step number three and how much you're going to put in that stock, but you're going to put quite a bit of money into that stock. So you don't want to have too much riding just in one sector. So say your number one stock was technology, don't make stock number two another technology related company. At this point, pick something from another sector, maybe manufacturing, maybe industrial, maybe consumer discretionary, maybe retail, something like that. Don't pick the same exact sector because you don't, if that sector struggles, or if that sector has troubles or whatever, if that sector becomes really competitive with everybody, there's a good chance that sector could struggle. And if you have both your main stocks in that sector, you're probably going to end up losing money, or your gains are going to be very muted than if you had something in a different sector. So pick out that second favorite stock, make sure it's in a different sector than what that first stock was. That goes into step number three, which is then you're going to put $2,000 into that second stock. So basically between stock number one and stock number two, you're going to have 60% of your money in two stocks, which is once again what I believe is fair. I believe that's worth doing, 60% of your portfolio, because these are your two main horses. In your number one stock, you have basically 100% more money in than the stock number two. So I think that's very key, guys. Make sure that second stock's in a different sector, though. I cannot reiterate that enough. So now we're going to move on to step number four. We basically have another $4,000 or 40% of the portfolio to basically invest at this point. So step number four, you're going to pick out a third and a fourth company, okay? But the third and the fourth company need to be safe companies. And I know nothing's technically safe out there, but it needs to be safe companies, big corporations that have big competitive moats, that their business is not going away anytime soon. I'm talking about companies like a Coca-Cola, like a McDonald's, like man, I'm trying to think, like a Walmart, like a Procter and Gamble, a Johnson and Johnson, some of these huge corporations. So, those monsters that they've been around for 100 years and they're probably going to be around for another 100 years, guys. Those are the type of companies you need to pick out for stock number 3 and stock number 4. Make sure they're huge, make sure they're safe companies. Make sure they're not there, because stock number 1 and stock number 2, they could be more risky companies, more growth, especially if you're more of a growth investor. So you need to have some diversification as far as some safe companies in there, especially when you have the amount of money you do. So now that you have your third and fourth stock, that goes on to step number 5, which is you're going to put $1,000 in each of those stocks. So basically 20% of the portfolio total is going to go in stock number 3 and stock number 4, those safe companies that, in case your other companies struggle, at least those ones are kind of hopefully going to hold up things, because those type of big safe companies, they don't usually go down very much unless the entire market goes down. Those ones usually either stay steady, don't really move at all, or they just move up a little bit over time, guys. It's just kind of the way those big, huge, $200, $300 billion market caps, that's kind of the way they move. So next up here, we're going into step number 6, which is basically you're going to have $2,000 left over at this point. So you're going to have 20% of your money left over. Now, what do you do with that 20% of your money, the last $2,000 to invest? So that goes into step number 7, which is you're going to use that money to buy whenever one of those stocks that you own drops more than 5%. If that happens, which there's a pretty good chance that's going to happen. You're going to be owning 4 stocks. 2 of them might be growth stocks, right? Stock number 1, stock number 2, those ones could be kind of volatile, especially if they're growth companies. We've seen growth company after growth company go down a ton or go up a ton in a rapid pace. So you basically have $2,000 on the sideline. And anytime one of those stocks go down over 5%, you can then distribute some more of that $2,000 left over into that stock to then lower that cost basis. And if you think, oh no, I'm such a good investor, my stocks are not going to go down, it doesn't matter how good of an investor you are. When you first invest in a stock, in the short term, we're speaking about the short term, in the short term, that stock has a 1 in 2 chance, a 50% chance to go up, it has a 50% chance to go down. And that's just the way it is in the short term. That's the way it is. As soon as you stick that money in that stock, it might go down, it might go up. There's a 50-50 chance. It just does not matter, guys. Unless there's let's say if there's a huge bull market going on, right? Then the chances your stock's going to go up is probably greater than if it's going down. And if there's a huge bear market going down, the chances your stock's going to keep going down once you buy it is much higher in the short term than it is going up. But unless one of those 2 situations are going on, which those 2 situations don't happen often, they might go down. So you might as well have some money left over to go ahead and stick into those other stocks and kind of and lower your cost basis, guys. If you like stock number 1 or stock number 2, if you like them at, let's say they were at $50 a share when you bought them, why will you not want to buy them at $45 a share or $40 a share, as long as you still feel the same about the underlying business fundamentals? It's like going to the store and seeing a pair of jeans and you just love that pair of jeans and it's $30. And you're like, man, I really want 2 pairs of those jeans, but I can only afford 1 today, so I'm just going to buy 1 pair of jeans. And then all of a sudden you go by the store the next day and those jeans are $15 now. And you're like, oh, now that they're $15, I don't want them anymore. That makes no sense. So why would you do that with the stock market, guys? So make sure you have some money left over. Buy when your stocks dip more than 5%. Lower your cost basis as long as you're still as comfortable in the underlying fundamentals as a company as you were before. And that takes us into our last and final step here, step number 8, which is basically you're going to buy and you're going to sell those stocks over time as you feel fit. So as time goes on, you're just going to kind of buy, kind of sell. Maybe that stock number one, it goes up a lot, and then you're like, oh man, now it's kind of a little overvalued in my opinion. Maybe I'll sell that off and make my stock number two into my stock number one. Just kind of play it that way and back and forth, and try to never own more than 4 stocks or less than 4 stocks, as long as you are in that bracket basically of $10,000, anywhere near $10,000. I think 4 stocks is about right for that amount of money, because you don't want to be in too many stocks with that small amount of money. Well, it's not a small amount of money, but it's a smaller amount of money. You don't want to be, have 10 or 20 stocks with that amount of money. And plus, I don't agree with having 20 stocks ever, because how are you supposed to be confident stock number 20 is stock number 1? But that's a whole other subject. But you want to buy and sell them, and you don't want to own or less or more than 4. That's just my opinion on that. I don't think that's a smart idea. You don't want to go in too heavy, because it is a decent amount of money, unless you know what you're doing as far as that goes, and you have tons of years of experience. And you probably don't have tons of years of experience if you have only $10,000. I mean, generally, people that are experienced and have had great gains are generally dealing with 6-figure accounts or 7-figure accounts. But that's kind of how you want to play it, buy and sell as you feel fit. As companies begin to get overvalued, one of your stocks, you can sell some of that off and then buy some new ones, and then just kind of play it that way until you kind of get up to the next ranking of $20,000, $30,000. Maybe you can add a 5th stock or a 6th stock or something like that at that point, guys. So this is how I would go about investing $10,000 if I was kind of newer to the stock market. I hope you guys enjoyed this today. Leave a thumbs up if you did. Leave me a comment if you have any questions on this, or you just want to comment in general, or if you think this approach is good. I would love to hear from you guys on this. If you just came across this video today and you're not subscribed yet, you may want to. We talk personal finance on the channel. We talk entrepreneurship. I'm an actual business owner. I give away so many of my business tips on this channel. And we also talk the stock market and how to be a successful investor. Thank you for watching, guys, and have a great day.